Brent, I will start with you. The fact that we are seeing fresh highs in the equity market, the fact that the 10-year is basically back to its pre-Thanksgiving, pre-Omicron levels, the 10-year yield. Is it safe to say that investors in the market are pushing past these record COVID cases and looking beyond for what's in store for 2022? And if so, what are those key themes you're watching?
Sure, I think so. And I think you've hit the nail on the head. I think the investors are looking past Omicron and seeing that there may be better days on the horizon for COVID. So I certainly don't want to make light of the health issue. But I think the market is starting to realize that some of the economic abnormalities that have been caused by COVID that have led to inflation sticking around may be beginning to ebb. And so within that ISM manufacturing, you saw prices paid come down. So you've had this shift from services to goods that has clogged ports and caused inflation to rise. You've had these labor shortages. And I think the market is starting to believe that those days are going to be better in the future. And you're going to see an economy that is still strong. Economic growth overall will still be strong, but with some of those worries starting to ebb. Think inflation, think Fed fears, and think COVID fears. And that's going to push us higher in the first half of the year.
Tracy, I want to get your thoughts on that. I mean, do you agree? It does seem like the market, the economy, and monetary policy are very intertwined here. Currently, it's looking like 3 hikes priced in for the year. Do you think that's actually what we get? How does this play out?
So we definitely think that the economy is going to.
Okay.
Sorry about that.
Ahead,
we think that the economy is going to moderate from here. You know, we're still going to see a good year in terms of growth, but we'll see it moderate in terms of growth in 2022. But that's going to be a good backdrop, we think, for earnings. We think it's going to be a good backdrop for prices for equities. But as you mentioned, you know, we are going to see the Fed come in here and they're going to start the year by tapering, and then they're going to finish it out with likely, we think, 2 rate increases this year. So a little bit less than what the market's expecting, because we think the second half gets a little trickier with the Fed active and also with midterms in the second half. So we're expecting 2 rate increases in 2022.
Hey, Brent, everybody knows, Q1 could be a peak for cost pressures, and the base effects are pretty lousy. But this December ISM factory prices paid down to 68 from 82. I wonder, you'd like to see some more numbers like that.
Absolutely. I think, I think that's the real basis for the economic optimism in Q1 of 2022. I think you will see inflation, which has been a prime worry, start to pull back because it's been caused really by this big shift to spending on goods that we've had that has been caused by COVID. And so if you look at goods spending, I believe it's somewhere around 16% higher on a real basis than it was pre-pandemic, while service spending is, I believe, 1.9% lower. I think in the first quarter that shifts, and I think that alleviates some of that inflation pressures, and that's the impetus for the market to move higher. I do agree with Tracy. Towards the second half of the year, I think we get a bit trickier, because I do think you're going to find an economy in the second half of the year that is close to where it was pre-COVID from an output gap perspective. And I think that's just going to cause some fears about real inflation actually becoming an issue in 2023. Look, we could be at the same place we were in late 2019 from a labor market perspective also. And I think that causes some tricks to be had in the back half of the year.